So, Happy New Year, traders, welcome back. It is Saturday the 6th of January, and I'm recording this obviously to be published or released for Monday for the trading week for Monday the 8th of January 2024. So I wish all of you a very prosperous 2024. There should be some really good opportunities. Certainly the markets are looking incredibly bullish, so the indices should be offering relatively easy setups to the upside. I think bears are going to have a really tough time. So for the bulls, I think it's going to be a particularly good year. Whereas what's going to happen with currencies? Well, we're just going to have to see whether we get that weaker dollar or stronger dollar. So very quickly, having a look at the economic calendar, you know what? US economy is doing just fine. And so really, for now, I think we would just focus on sterling to see on Friday what the GDP is. I'm curious now, how's the UK doing in terms of growth? Not really expecting too much, but it's also not really that dire in the UK either. So 2024, and again, you know, I realize that one of the biggest, the most significant election in our lifetime, it's going to impact the entire planet, is happening on November. Obviously, second week in November at the end of this year, and in the run-up to that, it's going to be absolutely crazy. There's massive instability globally, and democracy versus autocracy is very much in the balance. As dramatic as that sounds, it is absolutely true. In fact, since the Second World War, this is possibly the most significant development that we've had, because it's going to lead to World War III. So as dramatic as that sounds, it's very true. There's a straight line between autocrats such as Putin and democracy being weakened in other parts of the world. Just a straight line to that, and escalated events. So just trying to draw your attention to that. It is something we need to be aware of. I will try to comment on it where it's relevant, and it is something we need to be taking seriously. Okay, but that being said, let's have a look at the markets. US economy is doing just fine, and so really I'm going to be focusing on the UK, but the UK economy is also doing well. So that being said, let's go to the charts and have a look at what is going on there. So, and again, I think it's really worthwhile. So the reason why it's worthwhile bringing in the democracy versus autocracy is it's going to be interesting to, I hope, to be able to record how the markets cope over the next, let's say, 18 months until well into 2025. How do they cope with all the instability going on around the world? But let's be clear, a lot of it comes right down to autocracy versus democracy, okay? For the most part, democracies tend to do better, all right, because they tend to have less corruption and freer markets. And so that's really and that's very much at stake at the moment. So the largest economy in the world is under attack, and therefore we need to want to see how the market actually handles that. But that being said, from a purely technical perspective, it does appear as though the indices are bullish. So let's have a look at the chart here. US volatility is really at all-time lows here. It will potentially pick up later in the year, but for now it's very happy, so no problem there. When we have a look at the dollar index, so this is the first time I'm looking at these charts since the last analysis video I did for you. So this is brand new for me. I'm doing this. Just commenting on it. So what I want to mention here is we have that dollar index in a downtrend currently, but you can also see that it is sort of approaching a level. It's at a level of support within a sort of a range. It's at the bottom of the range, and therefore we could find that it starts to work its way back up to the top of the range. It could do that. It is currently testing resistance on the daily. You can see it's battling to get past that level. So really the key levels that we can watch is, should we ultimately break below the low here, we're then likely to see a weakening dollar as it heads down towards 100. 100 is a massive line in the sand. Once it breaks below 100, then it can start to head down towards 99, 98, and that would imply that we would get a weaker dollar in the coming months. Okay, but we're not there yet. So right now what's happening is we've had a stronger dollar, and the question still remains, will we see it continue to strengthen? So this week I'll be looking for breaks above the high of 103, and if it does, then 104 is on the table. And if that is the case, then then the likelihood of a stronger dollar over the coming months starts to come into the realm of possibility. So looking here again at euro dollar, we're still within a range. We could potentially head back down. We are within an uptrend on the weekly, and therefore the coming week, next week or two, could show whether we're going to find support in this area and maintain that bullishness, which is that weaker dollar, stronger euro. Sterling overall, really battling with a particular level here, so I'm just going to go ahead and mark this. It's really battling with that 1.27 level. A lot of exhaustion over there, and really it's more of a consolidation at the moment. You can see it's range bound on the daily, just ping-ponging up at the top and at the bottom. And so a break outside of this, actually the best thing to do would be to just sort of just identify this range so that we can see what happens with that. And again, that weaker dollar or stronger dollar will help this in most cases. But Maybe possibly Bank of England might say something that will stimulate it. For the most part, I think sterling right now is very passive, meaning it's going to push around by the dollar. It's not really going to do its own thing at this time. We'll see how that goes. Aussie dollar, US dollar. Beautiful trend, has pulled back into a level of support, and so I want to just see if we ultimately find support in this area and resumes that trend. But you can see again, it's a very similar pattern to euro dollar, and therefore it might just find some strength and work its way up from there. So again, very similar to euro dollar. Kiwi dollar as well, it's in an area here, could still come down for another week and then find some support. So the question is, will it be this week, this coming week? Sorry, this coming week, will it find strength and head up? That's really what I'll be looking for there. Dollar yen. So dollar yen has pulled back into this area, is producing a bullish candle here, so it's been a while for it to do that. If we get that stronger dollar, we're going to see dollar yen, no doubt. I think we'll see it head back up to this level, and it could then be leading up to a breakout, which is something that would happen later in the year, which could even happen actually in November, which would be around about the election. So that would be something like this. If it did ultimately break out, it would sort of go to about this period, and so you'd have that, you'd just have it sort of building up into an ascending triangle leading to a breakout, which would be the election stuff. So that's just hypothetical, but that's the kind of thing that does tend to happen. Dollar Swissy. Okay, dollar Swissy in that downtrend, to me currently retracing. So what I'm looking for this to do, it has broken out of this range. I think I can get rid of that range now, and really now looking to see if it could come back in and test this level of support and test that for resistance. So we'll see what's going to happen with that. Dollar CAD also within this downtrend. So right now dollar CAD also very much stuck range bound on the monthly. We need to see if that's going to ultimately work its way up to the top. So there's mixed structures within all the different majors, which hints at basically that the dollar is kind of not necessarily a driving thing right now, and we're going to have to see what happens with it. I find it interesting. In theory, as the world becomes more uncertain, the dollar tends to strengthen, generally speaking, but the US and the global indices are looking very, very bullish. So those are two things that effectively contradict each other. You can get a strong dollar and a strong stock market. You can have higher interest rates, central bank rates, and you can have strong markets. All those things can happen. But if it does become more uncertain, then I would expect to see that dollar strengthen, which means I would expect to see the stock markets come under pressure. Often what happens when we get to the indices, I'll talk about it, but often what happens is for an election year such as this, we would see the markets tend to go sideways. We're going to see right now, for those of you who might not be aware of this, the US Supreme Court, which is the Supreme Court of the United States, SCOTUS, is looking to hear a case which would effectively allow, there are three criteria to become, where you're ineligible to become president of the US. Okay, one is if you're under the age of 35. Second one is if you're not born in the US, only US born folks can run for president. And the third thing is you must never have taken part in an insurrection. And the reason for that is very straightforward. If you've taken part in an insurrection, you do not respect the democratic process, and therefore you aren't eligible to take part in a democratic process. You cannot be trusted with it, and you cannot be trusted with working for government. So the fact of the matter is Donald Trump absolutely doesn't qualify. He should be disqualified. So he took part in an insurrection. He cannot be trusted with it. So he should just, on the surface of it, immediately the law is very, very clear. However, there's a lot of politics at play, and the Supreme Court is incredibly corrupt. This is the most corrupt one they've ever had. Clear scandals of bribery and corruption, massive. They won't recuse themselves where they clearly should. There's a whole lot of stuff going on. So the thinking is that they're just going to say they're going to override the Constitution and further degrade the reputation of the court and just say Trump can stay on the ballot. What they should be doing is saying the law's clear, he's disqualified, and we move on. Now that would mean that if that happened, and it's the least likely thing, but it's massive if it would happen, there'd be shockwaves because they'd actually be doing the right thing. They'd be following the law, which nobody thinks they're going to do. If that was the case, then a civil war is likely averted. To much degree means the election is the market will recover, and the market will just go through to the elections. Trump won't even be on the ballot, and he'll go to jail, and everything else will be fine, and the world will calm down a little bit. On the other hand, what everyone expects them to do is the most corrupt option, is that they will somehow find a way to put him on the ballot, and it'll go through to the election in November, and we'll just have to see what happens there. Okay, and they're going to attempt to overthrow the election. Again, there's already stuff in the works to do that. So May you live in interesting times. You are living in interesting times. You are living in the most interesting times in mankind's history, for sure. What with climate change and all the other crazy stuff going on. So the reason I bring this up is because I want to talk about how that dollar is going to impact the market. So let's go and move on. Let's have a look at gold. This is very important. We can't avoid it. So whether you like hearing about it or not, that's just tough titties, because we really do have to talk about it, and it's very important. So just notice here that gold is battling in this area. Overall, the flow of gold is still bullish. MACD is nice and bullish. Price action is still bullish. It's just really battling with that 2000 level, 2050 and 2100. It's a whole danger zone that can't really work its way through that. That's okay. For the most part, the pressure is still to the upside, and we'll see again if we get that weaker dollar, we'll see gold boom. So just to recap, when the dollar is kind of not really doing one thing or another, then we can often find gold will do what it wants to do, crude oil will do what it wants to do, currencies will do what they want to do, everything just does its own thing. But as we had in 2022, when we had post-COVID, we had Russia invading Ukraine, massive inflation, the dollar just took over. And the dollar just became, stepped up. And when we get a situation like that, then we will get a lot of the asset classes moving. So if you haven't seen, I recommend, if you haven't seen, go back and have a look at a couple of years, go look at some of my videos from that period. So gold, for the most part, I think right now we're going to see this continue to push higher. Silver kind of, although we've got a lower high, and we are range bound, it might want to go down a bit, find the base of the range, and then work its way up. Let's look at energies. So natural gas managing to have a nice little decent recovery here after it broke out of this range. Again, I think we can get rid of that. We still have some bullish divergence creeping in here, so it's trying to turn around, but it's nothing exciting. Then we'll have a look at light crude. So light crude, I think we're going to see this turn around. We've got higher lows here. We've got that bit of bullish divergence creeping in. We need to break this high for it to shift and get above that 50-period moving average. So I think this week we'll see it push higher towards 75. Let's look at West Texas crude. Again, same thing. Beautiful, a lot more, quite a bit, quite bullish here. And I think we're going to see it push higher, but it's battling with this level of support, but we should see it try and push a little bit higher. Okay, let's look at the global indices. So the global indices are very much due for a weekly retracement. Doesn't really matter why. We know this logically and rationally. Indices, just like every other market, they should have weekly retracements. It's had a very nice strong run, needs to have a weekly retracement. It could be showing signs of that, and if it does, it's likely to pull back in. We might see it for a week or two, we might see it, and usually it'll drop aggressively. We might see it come back down to the previous level of resistance and test it for support. Same thing here. You can see we've actually had a really nice one on the S&P coming back down to the moving averages, actually even as far as 4,624 back into these highs. That would be great. 4,600 tested for support. NASDAQ looks great. NASDAQ's actually done a beautiful minimal retracement. That's probably a 3-2, and it's back in this level. So this is a great place for it to find support. So what could possibly happen this week is we break below and then finish higher at the end of the week. So we have a bit of a drop. Whereas when I look at, say, the Dow, for example, that Dow to me does need a bigger correction. So we'll see if that's going to be the case. Mini Russell 2000 at the top of the range still hasn't managed to break out of the range. It definitely wants to, but again, so this doesn't really matter because it's still within the range. The FTSE just starting to peak outside of the range here. It's on to break through this downward sloping trend line, so we can get rid of that. So it's looking a little bit more bullish than bearish. It's range bound. We're going to see if that can break out of the range as well. So quite a few of these range bound. The DAX, very nice. You could just see here a couple of weeks where it's been over Christmas. Market's not going anywhere. I'd love for this to come back down and test 16,000 or 16,500. Take a breather and then start working its way up. A little bit of a bull flag forming there. ASX starting, there's a bearish engulfing candle at a major level of resistance. Again, a great time for it to come back down to 7,400, 7,300. So a bigger correction would make so much more sense. So hopefully that is what we're going to get. It's a good thing, ladies and gentlemen. We need those markets to have these corrections every few months. And they're technically required. We have to have them. And they provide beautiful... they provide amazing stock portfolio opportunities. When you get your weekly retracement, it's a really good time for buy and hold people to get in on those positions. The Nikkei. Nikkei is hovering around near that level of resistance. So I'm still looking for that to break out. Looks fine. There's no... really what we're having here is just a correction within a bull market. Okay, much needed one, I might add. Apple. So Apple had... a bit of a correction down here. I'm looking for this to find support in this area. Okay, it is arguably a double top. arguably a double top, so it could actually find its way down a little bit low, but for the most part, I'm not really worried about this. Potentially, it would find support here at these old highs, 177, and then start to recover. So again, there's still more room to the downside there. Amazon. Excuse me. Amazon is already at a level of support, and it's part of the tech index, so we've seen how that's already a nice correction. But a move down to 140 would also be very elegant. Come back down to test that on the weekly. AT&T, beautiful, keeps going, continues to break up and get outside of it. It's within a bigger range, so it's doing really well. It can continue to push higher. That's good. It's nice that we're seeing some going through a bit of a correction. Some of the blue chips and some of the others not. So let's have a look at ARC. ARC, I think, will still ultimately break outside of this range. It looks like it's doing better than expected, so that's good. ASML, double topping possibly here. I'll keep an eye on that. It's really important, I think. I prefer for it to stay above this 50-period moving average, but it's, again, there's lots of room for a lot of these markets to correct a little bit further. Okay. Why do I say that? So if you're brand new, why would I say that there's room for them to correct further and therefore that's a fair possibility? Well, it's unusual for a market to do, if we look at the Dow here, for it to do such a small retracement. That's where Fibonacci retracements come from. There's all kinds of data to support it. We usually expect them to retrace somewhere between a quarter and 50% on average. They can go further than that, but somewhere. So even this mild 30%, excuse me, retracement would be normal and healthy, and that becomes more likely the longer that it has had a run without taking a break. So when I look at a lot of these markets, I can see they've started that weekly retracement. They just haven't had enough of a correction. They haven't had, let's call it a 382 retracement as a minimum. And therefore, because they're very overextended and they've started it, but they haven't completed it, the probabilities of it doing it are very high. Amex, looking very good. Broken outside of this range, looks really good. It's going to run into some trouble a little bit here when it runs up to these highs over here. So possibly might see a bit of a correction there. Berkshire Hathaway, managing to break out of this consolidation, looks really good. For now, I expect it to just continue going up. Coca-Cola as well. It's very sheepish, but it's going. Downward sloping trend line, started to break through it. So it is now looking more bullish than bearish. Should just keep going. For now, we'll see a little bit of bearish divergence there, but the weekly overall looks really nice and healthy. It's creeping above that 50-period moving average, which should give it more bullishness. BP is interesting to me. Again, I expect it to break out of this. If crude oil is going to climb, I expect both BP and Exxon as well to start to climb higher. And remember, it's range bound, for example. So ExxonMobil is now range bound. It's at the bottom, producing a little bit of a bullish candle here. Makes sense that if oil does manage to make it up high this week, so will this. Excuse me. General Motors, just pausing, not really doing much here. It's a nice little consolidation. There could then be a breakout to the upside. I would say that that was a failed breakout to the downside. Therefore, now my expectation is it's going to work its way up to 40. That makes the most sense. When it fails to break out one side, it often will then immediately try to break out the other side. Looks good. So JP Morgan Chase, again, I'd love to see a correction here, and we may get that this week, but nice and healthy. Adidas has, okay, to my mind now, so Adidas is not looking super strong on the monthly here. It might find support this week or head back down to these lows. Eventually, I expect it to pick up pace, but right now it's not very strong. It's had a nice recovery here, and now it's kind of limping along, not looking great. Meta continues to tick up to the upside. So that was really good. We got Morgan Stanley. Also a bit of a move at resistance. Again, here, a little bit of a pullback down to 88 would be beautiful and allow it to continue to the upside. NVIDIA. All right, so NVIDIA is trying, ladies and gentlemen, to break out to the upside here. I think it will potentially do that. So let's just pull back into the moving averages here. It's a really good play. So some of these might get some good news this week or next week and then push higher. Netflix. Again, for the most part, it's wobbling a bit here, but it's time of year as well. I want to see if we get a nice bullish candle and it pushes it up a little bit higher. So let's just stop and sort of recap where we are. A lot of these are in different places. Some are very overextended due for a correction. Some have just managed to break out, still looking nice and healthy. They're not all, and some of them looking a bit weak. They're in different places. That's not a bad thing. They'll probably align more once the indices have had their correction and go. So we could, if this plays out as expected, possibly the next move would be very bullish. So we'll see how that goes. In other words, the move we've just had was the very first really clear bullish move. Now we're going to get a pullback, then we'll get a second leg up. So, and then it'll possibly take a bit of a breather. So here, for example, PayPal battling a little bit. Again, not looking super strong. Not looking super strong, creeping up. This is good. So Spotify's pulled back, bullish engulfing candle. That's a nice little bit of a setup there. I'm just going to mention that. So that looks good. And so that should continue to just tick up. It's not overextended. Spider also looks, but it's in this range, guys. That's a very nice sort of bit of a double bottom. It should be able to break it. So really the big moment here will come if we can sort of break 95 or especially 100. We'd see this accelerate, but it looks okay. FedEx. Oh yeah, that's a bit of a reaction. I think I want to mark that. So that reaction there, I'm just going to mark it there. It's a bit of a battle, but it's quite bullish here. And that's not a very bearish reaction. It's a bit of a failure. So we're just going to have to see. It looks like it's probably forming a bit of a wedge. Tesla's battling with this downward sloping trend line. Not out of the woods just yet. Okay, not out of the woods just yet. We're going to have to see how that goes. So for now, not expecting much. If it's going to break out, it'll also again do it this week, but it's not looking super strong. So if you're a Tesla bull, this isn't looking super strong. It's not looking terrible. If you're a Tesla bear, it's not looking super weak. All right, it's stuck within a wedge. It's giving very much 50-50 signals. Okay, so there it is. Vanguard, S&P looking good, straight up to the old highs, doing a bit of a pullback. I expect this again, pull back down and produce a nice bullish candle. So we might this coming week get a bit of a deeper correction. Remember, it's better for the markets if we have that nice strong correction, maybe a big one, and then the next week we start to recover from that side. Okay, so we're going to have to see how that plays out, but that would be a really great way for it to do that. I find this interesting. So Walt Disney, a little bit of a potential double bottom here. I say that because we've got this bullish reaction here and then a bullish engulfing candle here. A break of the high, this would confirm that's a double bottom within an uptrend, and we would start to see it move higher. For breaks below that, we're just going to get a bit of a deeper correction. But overall, again, this is very similar to PayPal, very similar to, which one was it? Was it FedEx, where it's just stuck within a wedge? Was it PayPal was the one? Something else here wasn't looking great. Anyway, maybe ARC. Could do more. Let's have a look at bonds. So bonds are really trying to turn things around. So I'd also be looking for a bullish candle here on the weekly at some point and looking for that to kick off. We've got EURUSD, also looking for a bit of a continuation retracement down here and then looking for that to go. So different markets are hinting at a correction, which means, and the one thing they all have in common is that US dollar. So hinting at that possibility for the dollar to push a little bit further. Let's look at cryptos. Cryptos consolidating here, looking, they've got lots of buyers here and we need to see if they can break out here. Don't look, to me, ridiculously overextended on the monthly. They look fine. On the week, we've got a weekly bullish indecision candle. Okay, try to fail breakout here, fail breakout there. We'll keep an eye on it. It's still flowing to the upside, maybe a consolidation before it breaks out. So maybe what it'll do is consolidate while the rest of the markets are correcting and then break out. Ethereum, you can see same thing again here. Just indecision, swinging wildly. It makes sense. The last week was the first week of the markets. Not everyone's back, guys. I will continue to say this. It's really not worthwhile trading from about the 20th of December until about the 10th of January. During that time, the majority of liquidity dries up. Really, the people who run the funds, the really big money managers, are on holiday. Like, it's the one time of year where everyone can take a nice long 2-week holiday if they go to the Bahamas for 1 week and then go skiing for the next. They're really done until about that second week in January. Okay, so next week, this coming week is where I would expect it to pick up. Solana, nice little move to the upside. It's had a nice little pullback, so it's also ready to keep going. Cardano could do with a little bit of a deeper correction. You can see clear levels where it's battling with resistance. Just no buyers above there, but those are, once those get broken, we'll see it start to flow up. And Binance as well, also starting to potentially want to have a bit of a correction. So just those recap on those cryptos, they can largely go sideways. If they have a bit of a correction when the rest of the market does, that's fine. I'm not expecting too much from the market. What I mean by that is in terms of opportunities, I still want to see a really big correction. If it means we have to get that from a stronger dollar, then we get it from a stronger dollar. It doesn't really matter how we get there. I want to see some of these need to have a bit of a correction and give a bit of clarity as to what's going to happen. Once they have that correction, then I think we'll start to see the indices take off. We'll probably start to see tech stocks as well as those cryptos start to take off. With currencies, I'd play it as a lies, meaning whatever the setups are in currencies will just be what they are. So we might still, even though I was sort of originally, before I did my market scan, was looking at the possibility where that dollar might weaken a bit this week. I actually think higher probability that we'll maintain the stronger dollar for now, and maybe get those market corrections out the way. So another week or two. So maybe January will be a bit of a bearish month on the charts, and then February will kick off and be bullish. We'll see how that goes. Usually, historically, by the way, the run up to April is incredibly bullish. Okay, your most profitable periods are the Santa Claus rally, the tail end of the year, and then up until April, insane. And then it kind of goes a bit funny because then it becomes, sell a man, go away, which in the northern hemisphere, for those of you in the southern hemisphere, you wouldn't really necessarily appreciate how everybody in the northern hemisphere just takes off summer, and that summer is usually July, August, September. Just is how it is. That's it from me, ladies and gentlemen. Have a fantastic week. We're waiting for a lot of these trends to finish retracing and then pick up again. So it looks, touch wood so far, to be, it's going to be a good year. All right.